We are live. This is the market update. I am your host, Bill Noble. If you need a roadmap in crypto, and I think we all need a roadmap in crypto, stay with this channel. Check out the alerts group and Discord. And if the content works for you, please hit the like button down below. All right. Now, stream is working. Excellent. Let's welcome who's here. We have Alexandra first on the stream. Lee, Mahet, welcome to the show. Double Ace, Raymond, Brandon, Il Grump, Katya, welcome. All right, we have Miguel, Oleg, Ecrypt. Hi. All right. Ecrypt notes that DGen is moving. Boy, this group's been through a lot with some of these Coinbase coins. Just goes to show that, you can't give up on something if you actually believe in it. Lee says it's like the eye of the tiger playing in the background. Right on. Leo, VA Buds, Kwong, Gray. Welcome to the show. You're making it live. We appreciate that. Okay, so my job is to say something when no one knows what to say. That has been true since back in the Morgan Stanley days in 2000. And today I am not going to disappoint. And what we're going to talk about is very, very kind of macro heavy. Okay, let's skip this guy today. Fear greed is at 42. So there has been a 20-point drop in this index since this process with the geopolitical situation has unfolded. Now we're gonna go over specifically, because we can't talk about this anywhere like publicly. I want to specifically focus on what like financial markets are saying about these things in like institutional chat rooms. So we're going to go over that. I think the quick market update is this. This doesn't have anything to do with crypto, at least the geopolitical situation doesn't. Unless they hit oil facilities, as in the Israelis hit Iranian oil facilities. That seems extremely unlikely, given the fact that China gets all of its oil from Iran, or like Iran sells 90% of its oil to China, rather. And I would imagine the Russians would want to get involved because that just destabilizes everything. So they're not going to go for oil. Now, they may try to get to the nuclear facilities, which are underground and are going to require, I think they're going to require our assistance and some sort of massive, what are called bunker busting bombs. So the end game of the Israelis is to get to the Iranian nuclear program. We'll go over the details in a minute. But for crypto, everyone is freaking out. I understand that. Could they freak out more? Yes. Could this result in an event like October or August 6th, like Black Monday? Yes. Do I think it will? Right now, no, but we'll go over more details. Okay, so this is now on CNBC. Oh my God, it's back to 60K. Frankly, if this thing 3 days ago, 4 days ago, 5 days ago, if I had told you this was going to go back to 60 or 58, you would have been like, oh, wow, thank God. Wow. Thought this thing was going to completely leave without me. So, I mean, if you just look at it in that respect, it's like, oh, wow, it's a relief. And we have to find out what this exactly has to do with crypto. All right. So Solana memes actually did well. Big hedge funds probably afraid of missing out. Took advantage of the dip to get involved in big memes. I'm not sure if you can read anything into that beyond that. All right. So everyone's puking out of the crypto ETFs, which is unbelievable considering at where S&P is. We'll go over that. Bitcoin tanks, gold rebounds as Israel vows Iran will pay. So again, this rhetoric really is centered around the fact that they've lured the Iranians into attacking them so that they can turn around and take out their nuclear program, right? Which again is on Iranian soil in an underground bunker. Gold-backed tokens, like the crypto community is now telling you to buy gold. I don't know if I agree with that, but if we have another round of headlines or the Israelis go after, something on Iranian soil, which is definitely going to require U.S. help. Yeah. So everybody can get upset about that. I think the flip side, if there's a bright side to the Israelis going after their nuclear program, it's that could actually be like a definitive end, right? Like they lose their nuclear program, right? What are the Iranians going to do? Because they haven't done anything already. So if the Israelis actually did something on Iranian soil, technically that could be the end of whatever could scare markets, because they're not going after the oil. They're not, right? Because if they did that, you would have, there would be massive consequences for Israel. So there is an end game, in my opinion. Now, it's funny, the word Bitcoin and crash on social media. So it's like if you use crash and Bitcoin, right? This is some sort of indicator that comes from sentiment, for what that's worth, right? In other words, if you have another big flush and you have like some kind of panic trade where it goes to 58 or lower because everyone just loses their mind, in my mind, that's a buy because people will freak out. In other words, this thing went from extreme euphoria to extreme greed overnight. We went from meme coin super cycle to Bitcoin crash in like 3 days. To me, that seems ridiculous. To me, it seems like, what does this all have to do with crypto? Nothing. But I will tell you what does have to do with crypto in a minute. Okay. So retail keeps selling Bitcoin, right? And the ETF players and whales are just scooping it up. There's people on the institutional side looking at Bitcoin where it is, and even Solana to a certain degree, and they're like, oh, wow, thank goodness. We're going to take all of this because, this is the asset that can appreciate the most if and when whatever's going on in the Middle East either definitively ends or people realize it has nothing to do with crypto. Either way, right? So everyone's selling the Bitcoin ETF. Dumb, right? Everybody sees, like 2 days ago, Bitcoin was going to 74 and now it's going to 54. See, there's the media, back and forth. Everyone bailing out of the Ethereum ETF. This thing where BlackRock says Ethereum has a narrative problem. Vitalik is selling, right? You know what I'm saying? Like it's either a bottom or, Ethereum's narrative is messed up, believe it or not, in favor of Solana, Sui, and to the XRP, right? In other words, people may start looking at Ethereum and saying they have a narrative problem. Now, I actually think that benefits Solana, Sui, and XRP, but having Ethereum trade terrible doesn't help. Hopefully, we've reached a sentiment extreme in Ethereum where people are so bearish and they've given up. But I mean, just, like looking at Vitalik selling with this thing going down yesterday, it was like, oh, all right. So yeah, Ethereum breaks losing streak. Some market did come into some Ethereum ETFs. So to be on the bright side, that just makes some sense because you would want to get out of equities. Okay. So the net of the crypto news is everybody was bullish. Now everyone's bearish. Everyone's worried about another leg down. That may happen. If it does, I can tell you why. Also, if it did happen, I can tell you why it's a major buy. Okay, so let's sum up what we got so far. Israel's end game has always been to hit the Iranian nuclear program. And that's probably going to happen. Everybody went from bullish to bearish in crypto, and that seems like a mistake to me. Now, what I want to go through here in PowerPoint is something that I think is unique, because I think the real problem in markets is not the war itself. It's what the combination of the war and the situation in China can do to hedge fund positioning. Okay. In other words, recently we've had huge moves, right? You had a huge move in China, Chinese stocks. We'll go over it. You could have a huge move in oil. And if consensus hedge fund trades like stocks, right? Like everyone's gig along the Magnificent Seven. So if hedge funds get hurt on China, oil, and stocks, okay, someone's definitely going to get liquidated. Now, the first trade will be Bitcoin down on that because all risk assets will tank. However, that part brings in the Fed. The Fed is not going to sit around and let a hedge fund failure like destabilize the system. So I do believe that even if things go down, there will be a limit to how things can go down. Let's go over it. Okay, so this is, well, let's start with this. We talked about this yesterday. The Chinese have multiple stock markets. This is the one on the mainland. It's represented by an ETF called A-Share. This is the quarterly chart. Doesn't seem like much, but they did wipe out like 8 quarters of down moves or 6 quarters of down moves. And this is what the daily chart looks like. Okay. Chinese equities are going up for 2 reasons. One, because the Chinese government says basically we're going to do whatever it takes, basically, to stop our stock market from going lower and just generally revive our economy, prevent a disaster in commercial real estate. You know, youth unemployment is at 25%, and we're going to do something about it. So when you have moves like this, they're very exciting. But when you have hedge funds that were betting against this thing, for example, it's very typical for hedge funds to be long stocks, long American stocks, short Chinese stocks. Well, you can see how well the short Chinese stock part is working out here, right? It's all the way up to the Lux Algo premium zone, and I have no idea when this stops. You know, if you look at another Chinese stock ETF, these are the Chinese stocks that trade, mainland Chinese stocks that trade in Hong Kong. So it's more liquidity. This thing has got a double bottom, and it has wiped out every short seller that's gotten short since January of last year. And you can even go back to June of 2022. So literally everyone who was short this stuff is getting wiped out, completely wiped out, right? This is what this FXI looks like. It's just gap, 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 right? It's just, this is a US-based ETF. And basically, if you're short this, you can't cover, right? Now, this may be in the ridiculous zone, but you don't know that. Right now, this is a much more liquid, traditional Chinese index. It's basically stocks out of Hong Kong. It's called Hang Seng. Again, you have wiped out all the short sellers going back to June of 2022 to such a degree that the Hang Seng version of VIX, you know, we have VIX here, and it's like the index of fear. Well, the fear index over there is at 40. The fear is that they can't cover their shorts. They're flying into the options market to try to get some kind of protection because they don't know when this is going to stop. So something is, I mean, the Chinese have turned this around and somebody is going to blow up over this, especially if it keeps going. I mean, again, you could have a massive long-term double bottom and the whole chart thing could feed on itself. Now, I see this as constructive Bitcoin. Chinese are flooding money into the system. Some hedge fund blows up. That brings in the Fed. I think this is net positive. But let's just talk more about oil. So in China, shorts can't cover. We talked about this yesterday. They can't cover, right? Which means somebody blows up, right? Now, let's go back to oil and geopolitics. So, this comes from a Goldman chat room, an article posted in there, right? So this article is blaming the Iranians for what happened in Israel on October 7th. It's unleashed its proxies, meaning Hezbollah and Hamas, right? And also in Yemen, jamming up the Red Sea shipping lanes. And this is the key part. In this process, it has paid no meaningful price on its own soil. It's overdue for the Iranian leader to pay dearly. So this is like an opinion article. Well, that means that the Iranians are going to hit the Israelis are going to hit the Iranians on their own soil, going after their nuclear program. That's what that means. Now, people are short oil, right? Oil has been going down because China's economy has been seen as perma-weak and everyone's short oil. So now you have two hedge fund consensus trades that are being, quote, attacked, right? Short China, squeezed out. Short oil, to be determined, right? So oil has resistance at $73. This is just the crude oil futures contract. Equilibrium, Luxalgo equilibrium is not until 76. And if things got wild, the premium zone is up here at 80. I think if you see oil beyond 75, that's going to start hurting crypto. Because I don't think the Israelis can take out oil facilities in Iran. I think that would be insane. That would that would literally hurt the entire world. I don't think that's going to happen, but the simple fact of the matter is people are giga short oil futures. And higher oil is not good for Bitcoin. It's not good for crypto. So you could see oil up 1 or 2%. There's a Luxalgo trend line here that oil is trying to go through. This pink zone is resistance from where oil traders started to give up on longs. So we'll see, right? I mean, this is the driver of crypto, in my opinion, right? This has nothing to do with crypto, but if you have this squeeze in oil, you're going to have hedge funds with multiple types of positions under attack. Now, when hedge funds get attacked, what happens? We'll go back to crypto. So if you have Chinese stocks going up when everyone's short, if you have oil going up when everyone's short, what are the other consensus trades? So in other words, you're sitting here going, okay, Bill, this is all nice, but how do I know when I should make moves in crypto? Okay, you should make moves in crypto only if this thing about consensus positions getting liquidated spreads. So for example, here's gold, right? You have a wonderful cup and handle. It's got to its cup and handle target. It's a beautiful 5-wave structure up. It's reached the Luxalgo premium zone. And if this was anything other than gold, that would be like, yeah, you could take the money now. So if everybody's long gold and gold starts to go down, that's a flag. If gold stays here, that's actually great. That's great because it means everybody's not being forced out. Now, stonks. Oh, man. Okay. So stonks on a weekly basis. So you have a 5-wave top. You had a new high in the S&P before this started. You're at the Lux Algo premium zone. Everybody FOMO'd in. Now you got two things affecting equities, right? You got this port strike, which, people are already at Costco hoarding. And you have the situation in the Middle East. And you have the situation with hedge funds where if they're getting hurt on China and oil, the first thing that everybody does is sell the winners. So that would be gold and stonks. So if stonks don't go down, you don't have to worry about it. If stonks start to go down and gold starts to go down, okay, that's probably going to take all risk assets with it. So I'm trying to describe a process for when I'm not on the air. You have something that you can look at. So stonks, gold, oil, stable, fine, good. Okay, this hedge fund blow up thing starts spreading, not good. Okay, here's DXY, right? Another consensus trade, right? Short the dollar. Equilibrium in DXY is all the way up at 103. I know it's made several attempts to get above 101. We have to wait and see, right? Because what does everybody do when they're panicking? They pile into the dollar. And I would imagine everybody's short it because it's done nothing but go straight down, literally, right? It's like gold up, dollar down. I would hate to see this whole like hedge fund unwind getting into the dollar. All right. So here's the bottom line. Geopolitical situation. Israel will hit Iran's nuclear plant. That's going to happen. It's a question of when. Okay. Chinese stocks could trigger a squeeze in oil and a liquidation trade in gold and stocks. If that doesn't happen, we would be happy. Now, believe it or not, today is a solar eclipse, right? And we have talked many times on this stream about the power of eclipses. The lunar eclipse was bullish. And believe it or not, this historical work, even though it's a lot of numbers, I'll help you out with it. So when Bitcoin is down, like, noticeably the day before a solar eclipse, 5 days later down here, Bitcoin's actually up 81% of the time. So when it goes down before the solar eclipse, normally Bitcoin recovers. And, there have been some big recoveries. Last year wasn't one of them because the market had run up into the eclipse. So you saw profit taking in 2023 and 2021. So the bottom line is Bitcoin can go up around 4% over next couple days. And if it doesn't, it goes down 5%. So odds favor Bitcoin holding because a lot of things would have to happen in order to trigger something happening to crypto when I think this whole problem lies somewhere else. Now, if you look out 10 days, Bitcoin is up down here 72% of the time. Okay. So Bitcoin holds up usually. Now, the 2 times that Bitcoin didn't hold up, one of them was 2022. That was the start of FTX. And another one was 2021 in December. That was the start of the Fed, oh my God, trade with the rate hikes. Okay, so solar eclipses trigger big moves. Odds favor Bitcoin stabilizing and going back up. That's good news. And as you might suspect, if it doesn't, Bitcoin is vulnerable to what you would call contagion, which is Chinese stocks triggering something, oil triggering something, and then that moves from stocks to foreign exchange to crypto. That's it, right? So Bitcoin either goes up 5% or it goes down 15% because everyone panics. Odds favor not panicking. But if you have an event, you have weird stuff. It was 10%, 12% down in 2021 and 22% down off FTX. Do I think we're in those situations right now? No, I don't. Right. In other words, I think everybody is going to get afraid. And if everyone realizes that this does not spread to oil, crypto can recover. All right. And I'm not going to go through the rest of this because that's too much macro for you guys. All right. Now let's see who else is here. Let's see if anybody's got any questions. David, JJ is here. Welcome. All right. Let's try to sum this up. So there are a lot of altcoins that are doing okay, like DGen, right? There are a lot of points in crypto that would let you to believe that, certain altcoins are already starting to find a bid. This whole idea of a meme coin super cycle is interesting, but I don't think it's true. In other words, if you look at the value of tech in the stonks versus the value of tech in crypto, that favors crypto. I also think with crypto, if the market just simply sat here and scared everybody and looked terrible, it is a reminder that markets never look good at a bottom. Like if you look at this and you're like, oh my God, Bitcoin can't rally. And oh my God, we're waiting for the shoe to drop on the Israeli retaliation. You're just like, oh, okay. That could be a bottom. That could be a bottom. And you're going to want to own crypto when it looks terrible. The question is, what does it look like? I'm not really in favor of Bitcoin at like 54K, but you do have to be cognizant with your portfolio that these things can happen. The rise in oil prices would be the flag that if you have to like move stuff around, take profits on stuff that rallied, I'm only on the air 45 minutes a day. So again, I think the impact on crypto is limited. If it's not limited, then I guess you're going to get quite the dip to buy. If you can't tolerate that, adjust your position. At the end of the day, the geopolitical situation by itself is not going to hurt crypto. The biggest threat to crypto is that all of these dramatic moves in the market trigger some sort of, oh my God, liquidation. There's no, oh my God, liquidation in the world of legacy or hedge funds. I think the Fed lowering rates, putting high-powered money in the system to keep everything copacetic in an election year seems to be the more likely scenario, particularly after the Democratic vice presidential nominee did not do real well last night in the debate. I think that honestly increases the likelihood that the Fed, to help the current administration, cannot allow a disaster in stonks. It just cannot. Now, if it happens, the reminder is, when these type of things kind of get unwound, the word you'll hear in the press, if it starts, is contagion. The last time we saw contagion was like, I don't know, this kind of contagion was like 1998, and Greenspan had to cut rates 3 times to stop the whole mess. So it's going to turn around one way or the other. I'm kind of hoping we avoid some kind of FTX style decline, meaning some double-digit debacle. It doesn't feel that way to me, but I will tell you this. If it is a bottom, it'll look terrible. There is no such thing as a feel-good bottom. It does not exist. If it's a bottom and this is going to turn around and go to 100K, you're going to be scared to buy it, whether that's now or at 58, or whether it just sits here and you're like, oh God, I'm scared. Don't let them scare you out of crypto. Don't. Because, a year from now or 6 months from now or even 3 months from now, you're going to be saying to yourself, wow, they gave me multiple opportunities to get it at 60 or below. Right? So I know I gave you all these things to watch, but you know what? At the end of the day, big hedge funds are making other bets that our debt problem is going to become serious. And what's the only way out of a debt problem? Is to devalue the currency. And how do you devalue the currency? You rally gold and you rally Bitcoin. Okay, so that's it for today. I will see you tomorrow.